Good morning, everybody. This is Mr. Oxy coming at you live from Palm Beach in Florida. It is Sunday. It is Sunday morning on November the 7th. And in this video, we're going to take a look at Occidental Petroleum. Now, Oxy obviously just reported the third quarter results, and I thought they were pretty good. And the market didn't necessarily think so. In fact, Oxy pulled back immediately after announcing their results at the end of trading on Thursday, and then on Friday it stayed at negative 1% for most of the day. So where is Oxy now? Should we buy, sell, or hold? And maybe what we do is we take a quick review at the financials, and then you guys help me decide sort of what we do next. First off, in my previous video, which was called the uranium liftoff supply versus demand, I talked a little bit about the investment thesis, and Jay Kim very kindly reminded me that during the video I said, after all, uranium is also a fossil fuel. Of course, uranium is not a fossil fuel, and Mr. Oxy should know that, because once upon a time, about 40 years ago, I was actually able to recite the entire periodic table off by heart. But as I said, that was 40 years ago. So now an old fossil like me actually sometimes makes errors and even refers to anything that you dig out of the ground as a fossil fuel. Just for clarification, nuclear energy is produced from uranium, a non-renewable energy source whose atoms are split. Uranium is found throughout the Earth's crust, but most of it is too difficult or too expensive to mine and process for fuel into nuclear power plants. So I just wanted to get that out of the way, because very frequently I make errors, and very kindly some of our subscribers reminds me that I made an error. And the last thing I want to do is give you wrong information. By the way, many of the subscribers have also drawn my attention to other stocks that you've done well in, stocks that I should look at. Encore Energy, says Enzo. Roland said, I just bought ConocoPhillips. Mike Smith asked, what do you think about Rio? Bill Covey said, I'm in Sprott Physical, SRUUF. And Patrick said, take a look at Vail. The reason why I'm highlighting this is because I take note of your comments, and I actually make a note of all of them. And then as time allows, I actually look back and sort of see whether any of these are of interest to me. And thank you for those suggestions. I will certainly look at them. Just by the way, on something like, for instance, Phillips 66 or ConocoPhillips, I like to get in when it's undervalued and then make a bit of money. So some of them I wouldn't necessarily want to enter a new position in right now or at this time, because they're trading too high. Anyway, let me go through this reasonably quickly, because I have quite a number of slides from the financials and I want to get through it as quick as possible so I don't take up too much of your time. We closed on Friday at $33.42. It's not too bad, but really it should be $45 or more by now. The market cap, Occidental, around $30 billion, grossly undervalued. If you look at the actual value of the company, Occidental Petroleum plus Anadarko, and we're going to look at Wes as well just in a second, is way worth more than $31 billion. So for what it's worth, just from a pure technical and fundamental point of view, Occidental is grossly undervalued. One of the reasons why it's undervalued is because it does not pay a dividend. There are so many better stocks that you can buy right now if you wanted to open a new position, where you can buy an undervalued stock that also rewards you as a shareholder with a very nice dividend. Energy Transfer is one of those, and that's the next video I'm going to share with you on Energy Transfer specifically. But Occidental right now is in a position where they are repairing the balance sheet, and as a result, they are kind of like Mr. Scrooge. They don't share, even though their results over the past 2 quarters have been extraordinarily good. How good, Mr. Oxy? Well, the third quarter highlights showed us $2.3 billion in free cash flow generation, the highest level of free cash flow this century, has many investors asking, can we get some? Well, can you share? The answer is no, we're busy doing balance sheet repair. Oil and gas, strong operational performance with 1.16 million barrels per day, which exceeded guidance. So that's a good thing too. OxyChem, what a gem. I mean, this thing is just like literally printing money. If Oxy did not own OxyChem, their results would be arguably somewhat different. Highest earnings in over 30 years. A $5.1 billion balance sheet improvement. We're going to come back to that one in a minute. And a $2.1 billion cash balance on hand. Only $700 million of 2022 debt remaining. So let's dig a little deeper. There is that debt reduction of $5 billion I just mentioned a minute ago. At the end of December 2020, the total borrowings was about 35. and now we're down to about 30,760,000,000. So a reduction of $5 billion so far this year is nothing to scoff at. And obviously, undoubtedly, high WTI prices have helped because that's the primary source of Occidental's revenue and income. On the balance sheet under current assets, and I always look at current assets because current assets as a ratio expressed to current liabilities should be 1 or greater. So when you express this as a ratio and you look at the total, almost $10 billion here, so 9.9 billion. The reason why I also highlighted the line just above it is assets held for sale, $1 billion. So there are actually assets in their balance sheet that are earmarked for a sale, similar to the assets that we just saw them dispose of in Ghana. But take a look at the current assets. We had 9.9 billion, so almost 10, and the current liabilities of 9.1 billion. So this is a favorable ratio for Occidental Petroleum because their current assets exceed their current liabilities. Now, for what it's worth, the current assets obviously are cash and cash equivalents, like accounts receivable, and the current liabilities are typically the things that you have to pay within the next 30 days or so. There's also a liabilities of assets held for sale of $700 million. So if we go back to the previous line, assets held for sale of 1 billion, and then on the next line under liabilities, liabilities of assets held for sale, 700 million. So you can do the math yourself. The fact of the matter is, what we have is a positive current ratio of approximately 1.1, which is favorable to Oxy. Anything 1 or greater than 1 is good when you talk about a current ratio of assets compared to liabilities. The consolidated condensed statement of operations shows us a very interesting turnaround here. If we look at the 9 months ended September last year, so of course last year included the COVID pandemic with futures for WTI negative for a short period of time, 13 billion, now 18 billion in the 9 months. And if you look at the 3 months comparative data, 4 billion became almost 7. So pretty good. Right at the bottom of the page here, it says asset impairments and other charges. And by the way, when I look at the balance sheet or income statements, I'm looking for anomalies. I'm looking for outliers or areas where there are significant changes compared to previous reporting periods. So for the 3 months, September 30th, we can see, and most of us will probably remember the large impairment charges that drove the earnings per share into a negative for the 3 months ended September of 2020. So a $2.7 billion loss is just too big, despite the fact that this is not necessarily a cash expense because it's depreciation. Impairments, depreciation, things like that are not cash expenses, but unfortunately negatively impact the balance sheet and grossly so, which ultimately leads you to lower earnings per share. For 9 months last year, almost $11 billion written off impairment charges. And so far this year, in 9 months, only $173 million. So Oxy is doing good balance sheet repair, and the management should be commended for the good work that they do. And of course, the market has not reacted to that as yet. I think in time it will. When? I'm not too sure. I'll probably say we need to get through at least another 2 or 3 quarters before we actually start getting a market reaction. And during that time, Oxy will need to figure out a way to reward their shareholders. If they are not ready to reinstate a sustainable dividend, they can also declare a special dividend. They can issue additional warrants. They can do a whole variety of different things. They need to reward the shareholders who have been patient with them for a long period of time. Other items, income or loss from continuing operations before income taxes. So for the 3-month period, last year was $4 billion. And that was a negative in brackets. And here we have a positive of 1.2 as an income from continuing operations before income taxes. A huge turnaround. If you look at last year for 9 months, $14 billion as a loss has been transformed into $1.6 billion as an income. So a good picture there for Occidental Petroleum. Consolidated condensed statement of comprehensive income. Again, once I'm looking at significant changes year over year or quarter over quarter. For the 9 months ended September last year, a negative again, almost $14 billion transformed into a profit or a net income that's positive of 785 million. And look at the 3-month period, right? 3.5 billion last year for the 3-month period has become a $828 million income compared to last year's $3.6 billion loss. And of course, this repeats again below, and you can see this is sort of a common thread in the balance sheet if we compare period over period. How about the cash flow from operating activities? And this is an interesting one to look at because you need to be a little bit counterintuitive when you look at these numbers. So we have net income, $785 million compared to a loss in 2020 of 13.7 billion. And then at the bottom here or in the middle, an increase. And when you look at cash flow, an increase is in brackets. So it looks like a negative number, which it is in brackets. But from a cash flow point of view, this is actually good for Oxy. So this is an increase in receivables. And the receivables period previously that was outstanding was $4 billion. So they've managed to achieve a good collection on receivables in terms of having it just sit on the books. Because remember earlier on when I started off, I said on the balance sheet, the current assets are cash and cash equivalents. And the cash equivalents includes accounts receivable. But if you don't actually receive the accounts receivable, then you don't have it. You still have it on your books as a current asset, but until you actually get the cash in the cash register, you do not have the money. So this is all pretty good. You know, this picture is good as well. I have nothing negative to say about this. At the start of the video, I talked about Occidental's market cap of around $31 billion. Now, if we think about that carefully, Occidental arguably might be worth, $30 billion, and Anadarko might be worth another $25 billion. Hey, what's a few $billion between friends? But WES, Midstream Partners, is currently at the current stock price of $21.62 worth 8.9 billion, so almost $9 billion market cap. And guess what? Occidental owns half of that. So if you start off with the $31 billion market cap for Occidental Petroleum, the first thing you can do is knock off, $4 or $5 billion and say that's just the half of what Oxy owns in Western Midstream Partners. Here at the bottom, I added a little note. In March 2021, Oxy sold 11.5 million limited partner units of West Midstream Partners for proceeds of approximately 200 million, resulting in a gain of $102 million. Oxy still owns 49.6% of the limited partner units in West, so 50%, so half of the $9 billion owned by Oxy. Why else is this of significant? Every quarter, Oxy, as West has been going up along with other energy-related type stocks. They can sell just a few shares, keep their shareholding in West to just below 50%, which is a stated objective, and raise approximately $200 million. What can you do with $200 million? Or you can pay Berkshire Hathaway's preferred coupon with that $200 million cash that you generate from the sale of these limited partner units. And effectively, the cost of servicing that preferred debt has just been reduced by approximately half, right? The gain of $102 million on the sale that delivered proceeds of approximately 200 million. Not bad, huh? How about West? I mean, you could actually say, instead of buying more Oxy, I'm just going to buy Western Midstream. Current price, $21.62. This is a comparison for you. So the blue line here is West, and the yellow line or orangey line or whatever color that is Oxy. And you can say like, hey, you know what? Instead of investing in the one, I'll just invest in the other. I mean, you could do that. It's no problem, right? In addition to that, West has a nice juicy dividend yield of 6% at the current price. So if you wanted to invest in something that actually mimics or mirrors Occidental Petroleum and collect the 6% dividend, you could say, hey, you know what? Instead of buying Oxy, I'm just going to buy some West. Nothing prevents you from doing that too. Of course, year over year, Oxy has been outperforming West a little and sometimes quite a lot. But at the end of the day, as I said, you can collect a 6% dividend while Oxy is paying you nothing. What does Oxy look like in terms of financial strength today? A debt to capital ratio of 62%, it's in line. And with operating profits 5 times greater than the interest payments, there should be little to no difficulty in repaying debt. And we've come a long way, guys. Remember when every conversation was about Occidental Petroleum's wall of debt? Is the company going bankrupt? Is it going to survive or not? You know, like, what a changed picture that is. This is a good story for Occidental Petroleum. How about profitability? Based on its operating gross and net margins, Oxy converts above average percentage of revenues from profits compared to its peers. Furthermore, the company is profitable with an operating margin of 7.42%. Previously, the gross margin and the sometimes operating profit margin was better than the peers, but the net margin fell below. But Oxy's management has been so focused on cutting costs and capex operational expenses and things like that, that their cost of production has just become lower. Their cost of operations has just become lower. And as a result, Oxy is actually now outperforming the industry in terms of its operating margin. It's a good stock. Who owns Oxy? So the top 5 institutional investors are Dodge & Cox, Vanguard, SSGA, ICANN, and BlackRock. ICANN has dropped to number 4 in terms of his holdings on Oxy, and you can see there's a bit of a mix here. Some of them have sold some shares, and some of them have added some shares. Largest seller, the Vanguard Group. Largest buyer, BlackRock. So BlackRock on, you know, like the old saying is, white men speak with forked tongue. So BlackRock has been, on one hand, speaking at every opportunity at COP26 and on TV. You hear Larry Fink talk about green energy, green energy, green energy. And anyway, I'll just leave it at that. How about the top 5 mutual funds? So the top 5, Dodge & Cox again. So you can see Dodge & Cox, not only the top institutional owner, but the mutual fund from Dodge Cox is also one of the largest investors in Oxy. Vanguard, so Vanguard comes up a few times, number 2 on institutional, and 3 of the top 5 mutual funds are Vanguard funds. So you can see that they are quite keen on having this position with Occidental Petroleum. The reason why this is of interest to me is because institutional investors and mutual funds, especially mutual funds, don't you know, duck and dive. They don't go in and out of positions. When they take a position, they usually stay in it for quite some time. So this provides some solidity, and of course, Oxy is more than 60% institutionally owned. I think it's about 67% or so as I make this video. CFRA says Occidental is a hold. They have a price target on Oxy of $36, indicates a little upside from where we are today at $33, so about 10% or so. I think this is conservative, but at the same time, the market has not been reacting the way I had been expected it to react. So we'll see how we go. The analysts, these are more analysts than what cover Oxy from a US point of view. That's why there's so many of them. This is actually from my Canadian brokerage account. So 3 buys, 10 outperforms, 12 holds, and 3 underperforms. Nobody says sell in terms of the collection of analysts that they surveyed there, which is about 28. Our friends at TipRanks have Oxy as a moderate buy with a target price of $40, which is 21% above where we are today, and a high target 55 and a low of 28. I think that $28 price target is also the only analyst that says sell Occidental Petroleum. Where are we at right now in terms of repairing that balance sheet? So the de-risking has been complete, I think, completed. I think it's fair for us all to agree that they've done a good job at that. Regardless of whether you like Oxy or not, they've done a really great job de-risking, deleveraging in progress. We know that too. We know it for a fact. What's the objective here? The near to medium term is to reduce debt to the mid $20 billion range. They're only $5 billion away. They could actually probably knock it down to the mid $20 billion range during the 4th quarter of 2021, with WTI now at around $80, whereas last quarter it was at around $70 for the quarter on average. And then, of course, they want to restore mid-cycle investment grade metrics. If Oxy is successful in getting IG status, that's a good thing, because in addition to it providing more standing to Occidental in the marketplace in general, it also allows you to be able to shop for lower priced leverage. So your interest rate is lower because you're an investment grade equity as opposed to a company with leverage rated junk, for example. Longer term, debt reduction remains a cash flow priority. And then, like many people have commented on this, asked about this or whatever, when will Oxy return some capital to the shareholders? Well, in the future. Why is it vague? Because you first got to do this stuff before you can do any of this stuff. And before you introduce a dividend that yields whatever on an ongoing basis, it has to be sustainable. Otherwise, I don't even want it, right? So first fix the balance sheet, fix the company, and then pay me a dividend, and I'd be okay with that. How is Oxy doing compared to its peers? So at the start of the video, I shared some of the stocks that some people have said we should be looking at. So one of them was ConocoPhillips, yearly gain 150%, strong buy, right? I think I missed the party on COP. You know, I think because I'm invested and long in Oxy and Energy Transfer and Enbridge and some others and things like that, I kind of have to just hold my position and see where I'm at, and then wait for the next undervalued stock to invest in. But look at Occidental's yearly gain, right? So for all the people who complain about Oxy in terms of where we're at and where we're going, the annual gain, 237%. That's not bad at all. In fact, it's only second to Marathon, who has had a fantastic last year. Now rated moderate buy. Some good stocks here. You could almost, like I've said before on occasion, you can throw a dart at these and buy one of them and you'd be okay, sort of in general. So guys, that's sort of the deeper dive on Oxy. There's nothing really that I pick up in the financials or in the comments or on the conference call that makes me feel negative about Oxy. By the way, before I close the screen, if you like my content, please subscribe, and I look forward to your comments, because that's where we actually get to sort of educate ourselves. You know, if I think of Oxy, the one analyst on the conference call, Raphael Dubois from SocGen, Société Générale, he posed the question, sort of making a statement. He said, you've just announced an excellent quarter, and yet your stock went down, he said. And obviously these are my words, but Raphael said to Vicky and Rob, one of the primary reasons why Oxy was down on Friday while other stocks like Exxon, Chevron, etc. were up is because Oxy is returning nothing to the shareholders and not giving us as shareholders any indication as to when we can realistically expect some kind of a shareholder return. And that is actually a very, very good point. And obviously it's not my point that I made, it's Raphael's point. But he is making a really good point, because if you had to ask me, why during the time that you've been long on Oxy, have you also built a position in Energy Transfer? The answer is easy, because Energy Transfer is as undervalued as what Occidental Petroleum is. But it also pays a dividend of more than 6%. And I'm already like an old guy, you know, I'm a fossil. So like I need to kind of hedge my positions, and I need to not necessarily take unnecessary risks. So if you think of it just from a pure sort of peer-to-peer comparison, I know the companies are not the same, but just think of it like this. What are the chances of Occidental going from $30 to $60? It can happen, you know, over the next year. Obviously, it depends on a number of macro factors. It depends on the interference of the administration, the price of WTI, etc. There's a whole number of things that can impact that particular spike in the stock. So, for instance, Oxy could go from 30 to 60, say. And let's assume it does, and it still doesn't pay a dividend. Then I can almost say my Energy Transfer long position is a bit of a hedge, because Energy Transfer is $9. So what are the odds of Energy Transfer going from $9 to $18? Probably, arguably better than Oxy going from $30 to $60. Maybe, you know, in the greater scheme of things. But while I'm waiting and being patient in terms of my long investment, I'm also collecting from Energy Transfer a dividend of more than 6% on an annualized basis. So if it takes a year, and let's say both stocks double, my 100% gain in Occidental and my 100% gain in Energy Transfer, for example, would be equal. But in the meantime, also collected a 6% plus yield on energy transfer. And then you could say, what about real growth? What if Oxy doesn't go from 30 to 60, but only goes from 30 to 35, and then it gets stuck there for a while, which is possible too. I mean, it could even go back to 25. You don't know, right? And you go like, how do you get growth? Because that I'm just talking about now is sort of imagined growth. Oxy going from 30 to 60, or energy transfer going from 9 to 18, and collecting a dividend. That's one of the reasons why I carve out a little piece of my long investment portfolio and say I allocate this sort of small portion to a speculative investment in that case, in this particular case, uranium. And I shared with you in the previous video how the uranium spike has been good so far. So those are some of the things I do. I hope it's interesting for you. And either way, I look forward to your comments, and I'll talk to you guys soon. Bye-bye.